Welcome back. This is the Investors Roundtable number 4. We made it to 4 each week. I can't believe it. Yeah, right. I can't believe each week we get to the next week. You know, we got to be thankful for that. And not only did we make it to the next week, we made it to the next episode. So with that, I'm your host, Robert Kraft. Joining me today, so a couple familiar faces and some new blood. We got new blood on the show.
New blood.
There we go. So real quick, we got Thomas Bachrach from PFH Capital. We got Kelvin Seetoh at Slingshot Cap on Twitter. And our new blood, Jason Hirschman at Bachrach. What up, man?
Hey, nice to be here. Thank you very much for having us.
It's great to have you all, man. I thank you guys for taking the time. I know, hey, look, we're getting into those summer months. It's the vacation time. You know, but everywhere you can go for vacation, it's got internet, all right? So you can participate from anywhere in the world. But I digress. So I don't know. How's everyone doing? Let's take a poll here. Let's start with our new blood, Jason. What's going on? What's on your mind recently?
Well, I mean, everything is hey, I'm breathing on my own accord. That's a good thing, right?
Very good.
That's number one. Health is good. Everything is fine. You know, I think we spoke a few months ago about business, good moments, some bad moments, but we can get into that a little bit further on too.
Absolutely. Kelvin, what's going on? It's been a couple weeks since you've been on. So how's it hanging? Did you fix everything that happened last week?
Yeah, man. I think there was some issues that come out at home, but I think fix it. And I think in Singapore it's getting a bit, I think this is one of the most unique years. Been a long time that we had such cool weather, you know, in the month of, I think, July. So felt really good. But as you can tell, you know, I probably have ate a lot during this COVID-19 period. So gotta exercise, man. Yeah.
Yeah, it definitely, I feel that. I just started stretching actually, because I think my back was just starting to go out. You know, that's for, we joke about millennials, right? But, you know, look, even millennials have back issues. I mean, right, Tom? We got back issues.
Oh, no.
We do. We do. I got back issues. I got hip issues. I got 2 bad hips, actually. So
Jeez.
I'm truly on the cusp of elderly millennials here. So, yeah, man, things are good for me, too. Breathing without assistance, just like Jason. That's huge.
Good.
It's a big win in 2020. And also, you know, we're talking about fitness down there, Kelvin. Like I did put on the COVID-19 early, but it's coming out. You can see the neck fat's looking much better.
So we gotta go to this angle. That's the angle.
No, it's gonna be good, dude. I'm way better prepped now than I was a couple months ago for these video interviews. So it's nice. So.
Yeah, well, you know, I figured the timing was good. Like you were just starting to work out, so then that makes sense. To then we can do I get it. I understand.
Investing's hard work. Yeah, a lot of fitness that goes along with that. For sure.
Yeah, there's a lot of ins, lots of outs. But let's dig right in. You know, Jason, since this is your first time on here, you sent in your topic. You know, about thinking that since we're 50% done with 2020. You know, we've done kind of a little bit of a halftime report, but since your first time on, let's get your perspective. What do you think about what's happening and go from there?
Yeah, sure. I mean, it's been fairly remarkable, right? Just a remarkable year, as Tom has noted. And what did we see? We saw like an extremely fast stock market decline, an extremely fast recovery, in part aided by the record speed of, you know, Federal Reserve and U.S. government programs. You know, personally, I like to invest in new microcap positions the same way you're supposed to smoke a brisket, you know, low and slow, right? But this wasn't a brisket bear market. This is a flash fry bear market, you know? And Bobby, I bet I'm the first guest to ever compare like microcap investing to like smoking a brisket, but there you go, right?
Oh,
but I think you bring like your personal skills to like the microcap cooking competition, and not every round plays to your favor. So I only put only half the money to work that I should have, because I was thinking brisket, like a 2000 to 2002 pullback, or even the 2017 to 2019 drawdown. But that's okay, you know. Like in the long term, I don't think it pays to strengthen like your fast twitch muscles. And I'm changing cooking to exercise analogies now. I realize that, right? But it doesn't pay to like exercise your fast twitch muscles as opposed to your slow twitch, like endurance investing muscles. So, you know, I think like in the future, once again, like slow twitch muscles will again be rewarded. But I'm not sure about diversification. So I'd like to talk to you about that too. And while concentrating investing rather than diversification is probably the way to go in microcaps for at least for the next few months or few years. So I've just spoken a mouthful. So I'll pause and say, just looking forward to speaking more about what the heck just happened and where the heck we go. And if we have a little extra time, we can talk brisket. But I want to hear from my other friends on the line.
So actually, I'm going to jump right in there because I like brisket and I really got my attention here. So yeah, no, I mean, I generally speaking, I would say the Fed definitely jumped in and flash fried to brisket, and I'm not sure it's going to taste good when it's all said and done, but they definitely flash fried it, and it's probably not going to be I'm a little concerned about how this brisket's going to come out, but let's try it, I guess, first. We're letting it cool under some foil right now for an hour or two, so we'll see how it comes out.
I think our friend from Asia is like, what the hell are they talking about? This is
no idea, guys. No idea.
Where are they going with this?
I was gonna say, like, Kelvin, do you make your brisket with a little bit of ketchup and barbecue sauce, and then just let it, Kelvin, by the way, brisket is one of the most delicious meats of all time. We're making brisket for Kelvin when he comes to visit.
That's true.
Yeah, I got to know. I got to get into this, man. Whatever you guys are smoking on.
What are people smoking in the United States? That's what Kelvin's wondering these days. What's going on?
We are all morbidly obese, is what we're trying to tell you, Kelvin, here in the U.S. It's everything. If it can't be related back to a brisket, it's not worth talking about. That's the way we play it over here. So
yeah, it was a little strange that Jason tried to relate actual investing strategies to working out, because I don't understand. How is that? That makes no sense to me. Working out. I can't even spell it right now. But anyways, Kelvin. So since it's been a couple of weeks, what's been going on, and what do you think about what's been happening thus far?
Yeah, I used to think a lot about, I thought that, I had a good investment process, but, when COVID hits you, where's your plan B, right? There's no plan B around it. And I think, I really believe that in the COVID-19 situation environment, it really forced me to reevaluate the businesses that I have, that I actually want to invest with a set of stricter criteria. And, I used to think, okay, I like to have businesses that are like kind of like recession resilient companies, but now also companies that are anti-fragile. So what I mean is like, hey, I'm going to look at companies that are able to thrive even during COVID-19 environment. So what I mean by that is really going back to how the business model is being constructed. For example, if I look at some of the names that I used to own, for example, PaySign, right, which is a payment processor for blood donation centers. And COVID-19 or not, I think this donation still is required. They'll still come in. But another company that I own, which actually I allocated quite a sizable portion of my portfolio, is Intelligent System Corporation. It's a payment processor for Goldman Sachs and Apple's latest collaboration is the Apple Card. But when times are bad, no one is going to sign up for a new credit card, and it affects their revenue. So it kind of got me into the mode of thinking even deeper. Not just a scalable model, not something that you can see a growth, long trajectory growth rate, not just a mode. But, when COVID-19 happens, I think it's quite unforgiving that a lot of demands, actually consumer demand, corporate demands start to shift a lot. So I'm just going to think a bit more deeper. And I think that it forces me to really think a lot deeper as well. Like, I think one of the interview sessions, I talk about like a peacetime CEO and a wartime CEO. So today we are at war, so like how do CEOs really think critically, even under pressure? Whereas some CEOs, they do perform very well, but then when it comes to a uncertain environment, they freeze up, they choke up, they don't perform. So that's the way I'm thinking right now.
That's pretty interesting. I mean, look, I got to ask, because we've talked about I think in the last few weeks, we've all been kind of asking this, not me because I'm an idiot, but you got the experts have been asking this question. It's like, okay, it makes sense. Like I want to look for recession-proof businesses, recession-proof business models, but at what point do you then overthink it? At what point do you stop yourself like, okay, recession-proof, like what do I really mean by that? Do I then have to think about a time frame? Like what goes through your brain when you start thinking to yourself, okay, what does that really mean? And then how am I now reevaluating my whole new investing process with COVID-19. I mean, at what point are you like, okay, stick to my guns, to, all right, let's dig a little deeper and go from there? I don't know. Floor is everybody's. I have nothing to say on it because I'm the dumb.
I mean, I would say, like, so you mentioned anti-fragile, right? Which is like, it's like we're gonna find things that like benefit from these periods of turmoil. Yeah, I'm kind of, maybe I'm a little bit more on the Bobby side, where it's like, yeah, I'm not quite smart enough to figure that piece out of like who's gonna like truly benefit. But so like I'm not focused on like the you know, Talib, like, you know, anti-fragile stuff. I'm kind of more just focused on, are they fragile? You know, I like not fragile. Like, not fragile is good enough for me. And so much of that boils down to is, you know, is the actual business good? Like, meaning like, can they reinvest at reasonable returns on capital and generate actual cash flow? Can they, it doesn't need to be regular, it can be a cyclical business, but like, have they structured their balance sheet and their actual setup for the reality of their business? Like, if you're in a cyclical industry, you shouldn't be hyper leveraged going into these things. And then, yeah, it'd be just basically beyond that. Like, I just look at the balance sheets a lot, because in the end of the day, like it's, you know, what's the, is it Buffett that says the comment? I'm going to paraphrase and butcher this, but it's like cash. It's like, you know, when you don't have it, you like desperately need it. It's like air, you know, when you don't have it, you desperately need it. But when you have it, you don't think about it, you know, and that's, so he relates that to cash. And like, so I think if you went into this thing with companies that generally had good balance sheets, even if you thought their business models weren't perfectly aligned for this, even if they were horribly aligned for this thing, like, I mean, it could have been a restaurant even, like, at least you were, you know, not selling after a 60% decline because you were like, hey, this is going to go to zero. You were like, they'll see you through. You know, I'll get an opportunity to get out of here better, potentially. So, so in summary, I don't think I'm looking for the anti-fragile as much as just not fragile, you know?
Yeah, I think in microcaps, it's particularly difficult to find anti-fragile companies just because of the nature of the size, the nature of, you know, even if they have some kind of moat building it, it isn't very deep, it isn't very wide, right? So I think in some ways, if you're interested in anti-fragility, you find that perhaps in other parts of your investment portfolio, and then with the microcap section, you have to take a little bit, you know, hopefully low levels of fragility, right? But a whole lot of upside if things go correctly. So the second thing I've been thinking about is in terms of, you know, let's say fragile investments, is the fragility around the business model or the fragility of their balance sheet, right? Because sometimes you just have companies that have a good business model but just entered in with a weaker balance sheet than they would otherwise have because they've done a recent acquisition or some other event that affects their balance sheet. And then the third thing I would just add is that you take a situation like, how much planning should we really do for like COVID-19 continuing, right? I live in Las Vegas. I moved here in 2000. Like up until this year, casino, the strip never closed down, right? You could walk into a strip casino 24 hours a day. So, and of course that all changed. The number of these gaming stocks really took it in the rear, excuse my language. But you know, how much should we avoid gaming stocks because of a COVID-19 situation? You know, I don't know. It's a difficult question.
Yeah, it's like, how long do you avoid some of these sectors that have been affected? Like, how? Like, how like, what kind of mental model or algorithm or things that really smart people do you do to to predict that? I mean, what are some of the things maybe you guys have thought about that are helping you, at least in that sense? Is there
I mean, one of the recent kind of like reflection that I have, should the companies I invest in serve a very large amount of consumers, or would you rather your business serve enterprises, big, strong enterprises, blue chip enterprises? So those are like the talking points like sometimes I have in my head regarding the businesses that I invest. But what are some thoughts from you guys? What do y'all think?
Well, I think actually one thing which has just been a theme that I'm sort of been starting to work on, and I think it really hasn't been touched on by a lot of like microcap investors, is that historically in a recession, microcap companies really didn't have that much access to cheap capital, right? If you needed capital in a recession, man, you got you're in trouble. You're paying very high rates. You're doing equity at a very low price. But I think the introduction of this Main Street lending program by the Fed could be a possible game changer for companies that at least have some positive adjusted EBITDA, but with somewhat weaker balance sheets. So I think that a lot of investors really haven't taken a look into that. And even though this program is just being ramped out, I think it's going to de-risk some companies in the microcap space. And this was something that never existed in the past. When companies can basically borrow at very low rates as a microcap, it's really quite interesting. I think it's an intriguing opportunity to look for companies that can take advantage of that.
Yeah, that's
fair point. Yeah, it's a fair point by Jason there too. And it's what's also interesting about this is that this is a short-term hit. We don't know how long it's going to take for unemployment to come back down, all those things, but there is a light at the end of the tunnel here. People aren't going to stay cooped up forever. Hopefully we get a vaccine, sooner than later. Even if we don't, I can guarantee, I feel highly confident that in 2 years, people are going to be back to relatively normal lives. I don't know how long it'll take for the economy to recover, but so if there's access now to microcaps for, with cheap capital that just to get them through, to bridge them over, it could work here because this isn't necessarily a long-term structural issue. Also a good point but from Jason earlier on the fragile comment. It's not just the balance sheet, of course, it is the business model and the actual business itself. Like it's, you can have a great balance sheet and it allows you business for the next 5 years and watch the balance sheet go to crap. That's generally not a fun investment. So, he added that in earlier. I wanted to give a hat tip to that comment.
It's always like nice when the new blood gets a little bit of praise. I appreciate it.
Wow. Yeah.
Yeah, one other thing I wanted to because we've talked about this point, I mean, there's so many different ways to really look at it, and every day there's new data and new information that we can use potentially to analyze. Like at one point, things are looking rosier with, Disneyland and Disney World opening up, and now it's closed again because Florida's a mess, and California as well out here is a mess, so it's interesting each week that we come on and talk about it because there's so many new things that happen that might, I said this last week, but now there's new data and things are now, and also when you see some of these earnings reports that are coming out as well, and seeing how some of these companies are performed or what they're doing to, I guess stop the bleeding. I guess that's the phrase. I don't know. What are some of the things you guys have seen on that front?
I'll actually go ahead and comment on the whole Disney thing, actually, since no one jumped immediately in. I actually saw a rumor today. I don't know if you guys saw this, and I did zero vetting of this. So, take this with the largest grain of salt you can imagine. But I saw a rumor that they're talking within Disney. Now, they're strapped enough because this whole reopening plan is going to be tricky that they might start flipping off some assets. And if you were disappointed by the recent Star Wars movies, they might have to sell Star Wars. So if you're a Star Wars fan, that's bullish potentially. So it's
at least something positive to come out of this.
So something positive could come out of this. I just think it's I just kind of had no doubt in my mind that things will be back in 2 years. I just at a certain point, even if this becomes just a regular thing that we have to live and deal with, it's just, I mean, look around ourselves right now. I mean, look at what's happened in first 6 months of this year, right? Everyone basically, we've massively reduced human-to-human contact. Mm-hmm. When we do that, what we do is we actually increase all the virtual contact, which is to say social media, which I would argue is not a recipe for human happiness. And it's, I think we're seeing it start to result in insanity just in the general world right now. I feel like people have lost their damn minds. And part of what we're seeing in a resurgence, I think, here in the U.S. is just people are showing more and more of a willingness to go out there and kind of take risk, even stupid risk, as you can see. And it's, so I do think we're in like a new normal right now. I'm not sure that it's going to be there in 2 years, and hopefully it's going to not be there in 2 years because, we have a vaccine and, what's going on in Oxford with AstraZeneca, what's getting developed over there works out well. But regardless, the current era we're in, I think is going to prove to be fleeting. So like, I think one of the interesting things to do for investing right now is to try to say, all right, like who can survive another 2 years of this and then come back storming, and have this amazing 2022, 2023, 2024. But they're priced as if we're going to live in this new apocalypse forever, essentially. Those are some of the most interesting things to me right now, because, and if you're just willing to sit and watch it do nothing for a little while, that's okay.
Yeah, what I think those are, I think it's great points, Tom. And I think it's important to, not get caught up in the moment, right? That we're living in, right? I think anecdotal, when I would speak to people initially just a few months ago who lived in New York, like East Coast investors, right? They seem much more pessimistic than the people out in the West Coast who are like, this COVID-19 is bad, but it's not the end of the world, right? And as it sort of invades your neighborhood, then perhaps, your mindset changes, right? You start, first of all, you're sort of filled with anger with other people who don't necessarily do the things they're supposed to do. And I think it sort of just projects into like your thoughts about the investment, sort of landscape out there. But what I'd like to say, actually, just to add one point, Bobby, is that, honestly, the stuff that worked, let's say a few years ago, even, quality as opposed to like, let's say like value or more cyclical plays, in some ways has continued even in this COVID-19 era, right? Not just like in microcaps, but let's say even in large caps, right? The SaaS plays, the capital efficient, high return investment capital businesses many of them have done better than the more traditional value plays. So in some ways, the trends haven't changed because of COVID-19. So if you're a quality guy like myself, in some ways, I'm just playing the same game I did even before COVID-19.
Yeah, I mean, I just want to jump on and just to add my perspective on that. I think, I guess there's this kind of, when I speak to a lot of more American investors for the last 2 years or so, I feel that Americans tend to be a lot more optimistic by nature. And I don't know whether it's good or bad. Okay.
Oh, really?
Okay. But I mean, for me, like, being an Asian, being born and being brought up in Singapore, I think we are more like conservative. So when it comes to this whole COVID-19 kind of issue, we tend to say, hey, here's second wave going to come. Do we know whether there's a third wave, fourth wave, right? Are we going to get out of the tunnel? I think humanity will definitely find a solution to that, but how long, right? And if it's like that, then how long are you willing to be, because when it comes to investment returns, are you willing to just stay like that, flat for a couple of years and have like maybe not so good returns, right? That could be one possibility. Whereas, when I look at certain companies right now, I'm just thinking of like, performing a surgery is never fun. Like, especially when you're doing it on yourself, you're going to think hard, you're going to revisit your investment thesis. But, I really think that, instead of waiting for some of the names to bounce back off, once COVID-19 is resolved, why not, we take the chance to really look at the portfolio right now and to reposition yourself to say that, hey, even when the COVID-19 wave 3, 4, it's still going to be fine. Like we've talked about companies like IntelliCheck, right? When there's a COVID-19 issue, people are just going to have more fraud identity theft that's going to happen. Or, talk about Coro Medical, that's going to be a very relevant product for people who want to stay at home and still receive medical care. But I think to Bobby's point about, what I think we should look at, I think earnings transcripts or what we've been observing, talking to a lot of CEOs, is really, looking at the CEOs and, do they still think it's business as usual? Because I think that while we still have this idea that, hey, things are going to improve in the future, but the CEO should actually do something to prep the business model to become more resilient for the next, kind of health pandemic kind of issue, right? So I think one of the example that obviously, so I own this company. It's called Galaxy Gaming, and if you talk to the CEO right now, they are actually providing a digitalized option for casinos. And wouldn't that be something that we would like, right? It's not like business as usual, and then you say that, hey, we're gonna wait for COVID-19 to be resolved. But what are they doing? How are they being proactive, right? Those are the steps, I think, characteristics that we really want to look at, because when they can demonstrate such characteristics, it really shows execution. It really shows that they are quite forward thinking. So I think what we really need is a management that's really forward thinking in their approach and prep themselves, for such uncertainty as well.
Yeah, and I would just add that I think this is one of the benefits, and I own Galaxy Gaming too. This is one of the benefits of conversing with management teams, right? You get to sense the level of creativity that they have. You get the sense, how do they look at the world? How do they look at their, the opportunities or the problems they have in their specific market? And that's an opportunity that you have as a microcap investor that you don't have necessarily if you're investing in IBM, right? So, and it also pays dividends, not just only for microcap investing, of course, but a lot of these companies exist in the same world as larger firms, right? So talking to a Galaxy Gaming may help you decide whether or not to invest in Scientific Games or AGS. So it's one of the real advantages of being a microcap investor. Just do a little plug for microcap investing there.
Hey, this is the general investors roundtable, but microcaps, look, that's our bread and butter.
Heck with microcap investing. Don't do it.
That's our lifeblood. Let's go. No, that's fine.
Tom has some terrible numbers about how microcap stocks have done recently. So why don't we bash microcaps for a moment there, Tom?
Yeah, this is a super logical, great transition, guys. Here we go. So I'm going to dive right in here and talk about this next topic. Does that sound good, Bobby? So we are, So we actually ran some numbers. So obviously there was a chart making the rounds on Twitter, which was has some flaws in it, but the general message I think was true, which is that if you kind of took the S&P 500 and you looked at the top 10 companies, you looked at the top 50 companies, and you worked your way all the way down, basically, each rung you go down, the smaller the company gets, and this is all in the S&P 500, the worse they do. So I took yesterday I actually did a quick analysis, super imperfect, the method, but, I don't think I was materially off, which essentially said that the median U.S. microcap, that's a $50 to $300 million company, is down about 21% year to date. So that's the median microcap in the U.S. If you look at the median mega cap, that's a company more than 200 billion. They were up 5% year to date. And so there's clearly something going on here at the, where we're seeing things at the very tippy top do well and things that lower down do poorly, right? So, there's actually a pretty obvious explanation for it, so far. And the question is it sustainable and is it going to rotate back, I think? And I think the answer is this. If you look at the mega caps, the top companies in the U.S., they're FANG stocks. It's Facebook, Amazon, Apple, Netflix, Google. It's literally if you break it apart, the mega caps in the U.S., they're 70% technology and communications. 70% of the market cap, that's what it is. If you actually broaden that out to what the S&P 500 or top 500 companies in the U.S. are, it's half that. It's 35, 40%, somewhere around there. So basically, just by virtue of owning those really large ones versus, say, the S&P 500 as a whole, you got a certain amount of benefit because, for good reason, if you're a tech company, communication company, COVID-19 didn't affect you the same way. None of these mega caps include energy companies. That was a good thing. So they ran up, and do I think a lot of what we've seen has been induced by Fed policy? And but that doesn't explain the whole thing. And clearly there's been at the tippy top, like you've seen stuff going up. Now, this kind of brings me back to the point I was saying earlier, though, is, you know, that can't occur forever. So, like, if you bring this point up to people, people will say, yeah, like, so why would you ever invest in a smaller company? And you're like, because a lot of people are asking that question. Like, everyone's starting to say that. And it's now become so obvious that the most important thing for a business is to be prepared and right on the cusp of this new reality we live in. But what if this new reality that we live in isn't the new reality? What if it's like 1918, where people lived in a new reality for a long time, and, you know, they had a lot of the same measures where people wearing masks and weren't going out as much and were doing all these precautionary things for logical reasons because they didn't want to die, you know? But guess what? Eventually, the issue went away, and almost immediately people dove right back in. You know, like last time I checked, the 20s were, it's just a bunch of people doing the Charleston and partying pretty much in crowded public places, you know, and we just lost 50 million people worldwide to a flu. You know,
Yeah.
I just, humans are social creatures. I'm without a doubt, this thing has accelerated trends that were already happening. But also, as usual, I think the average person is now taking it too far and saying, things will never be the same and blah, blah, blah. And like, I'm not trying to predict the timing of it, but things will come back. Like, we need energy. Like, we can't run our economy on tech stocks. Like, you can't. Like, you need, healthcare, it hasn't done as well, weirdly. But I guess it's because a lot of healthcare stocks, frankly, are getting killed right now, because they had, basically, people stopped going in for colonoscopies, let's put it that way. And so, I do think that, we need to look at what's happened, see the wave that's already happened and these stocks outperforming, and kind of say, okay, the market's priced in a couple years of sorrow for these sectors and triumph for these sectors. Do we think it's sustainable for this to occur forever? Or do we think in 2 years we're going to see a rebound back the other way? And should we be starting to think about it in our investments? Because we know the market doesn't wait until it happens. So, I would guess as the vaccine stuff continues to get closer and closer, as long as that news is good enough, doesn't need to be perfect, needs to be safe and reasonably effective, even if you're getting a lot of doses, I would see some of these opportunities outside of tech to be interesting. Be kind of my summary on that. Feedback. So,
Kelvin, do you want to go first, or would you like me to comment?
All right. I'll go first. So, actually, when you talk about the new reality, kind of talked about the matrix, right? The blue pill, the red pill kind of thing, just sort of like hit in my head. Oh, that was interesting. So I think there's a few dimensions to think about it, right? Whether it's sustainable. So, but one thing I think we do have to admit is that if you look at those tech companies, fortunately or unfortunately, I think they are the ones that have been driving the change a lot. And in fact, if all of us come across what Microsoft CEO Satya is saying, actually is the digitalization have been compressed, right? Whatever that could have happened for the next 12 months have actually happened in those short periods of time. And frankly speaking, I think those earnings have actually been growing rapidly. So I think in terms of the price multiples for the value and the growth that's going to come true for those businesses, I still feel that's at a sustainable level. But in terms of, when we look at the S&P 500, it's really unfair that, certain companies are just grabbing too much attention. But I do think it kind of reminds me back into the olden days where, especially in the period right now, where there seems to be this flight to quality mentality, especially I think, there's a lot of fund managers out there, they really want to have liquidity right now. So I think in a very big way, this whole uncertainty kind of thing kind of like got them like removing all the MicroCaps, right? And then kind of like jump onto the big names. And, there is saying last time I remember, sometimes I think there was the olden days when IBM was really expensive, and people say, hey, you know, when your shareholders are going to look at your fund and say, hey, you know, why don't you own some IBM, right? You're going to sound really bad. But if everyone's owning IBM and you're owning IBM, and if you fail, it's okay. Everyone is failing together. We are all reporting negative results. So you don't perform any worse than anyone else. And I think the way how I think those indexes are being structured, I do think is flawed as well, because they don't look at fundamentals, but they just look at size, they look at transaction, they look at liquidity, right? It's just because the fact that you have gotten bigger, so you got included into more indexes, and you know, there are so many funds that actually just buy indexes, and that kind of like compounds the issue, right? Whether it's a good or bad issue. So I think those are some perspective to that as well. And yeah, maybe I'll let Jason to share.
Oh, sure. You know, I think first of all, I think it's interesting that, you know, if you study, of course, market history, right? And you look back to say at the Dow Jones, we have a long history of the Dow Jones, right? The Dow Jones was down in 39, 40, and 41. And of course, in late 41, we had the Pearl Harbor bombing, right? And you would think that, you know, with the depression and then with the war, perhaps the market should be down for the next few years, right? I mean, but instead the market was up for a couple of years in 42, 43, and 44. So yeah, we do know the market looks ahead, and you could ask somebody if there was whatever the Zoom equivalent was, right, in early 1942, you could say, well, you know, should I invest in stocks that are good for war circumstances? I mean, this war can go on forever, right? But it didn't. And so I do think it's important to sort of look beyond just a few years, but also to understand, as Tom and Kelvin have noted, that and so also, you know, the world is also changing. This is an acceleration of certain trends that are existing or creating some new trends. Mm-hmm. So, you know, and you have to, you know, look at your investments to see do they at least not have if they don't have a great tailwind, but at least not a headwind in their direction, right? For fundamental reasons.
Right.
Yeah. So, you know, the only other thing I would say is that I'm not sure, like, you know, particularly in the smaller world where I hunt, sometimes like these microcaps, like this, I think I mean, microcap community has had a tough time really the past number of years, with some rare exceptions. And I think, you know, I see Bob there, Bobby just, you know, nodding your head. We all know it. And I think partly because, you know, diversification hasn't worked. You know, this flight to quality, if you look at how many quality stocks are there in the microcap world, how many high return on invested capital, how many stocks with the possibility to be high return on invested capital, there's not too many, right? So diversification and sort of value has not worked, you know, in the microcap space. And I really don't know when it's going to turn around. In some ways, like, it'd be easier to turn around, right? It'd be easier for all of us. But I'm afraid that trend continues. We're going to start, you know, continue to see relative underperformance for microcaps, even if they're not negative, you know, relative underperformance. So it's a bit of a scary world out there for microcaps. I think even going forward, to be honest, I think you got to be very selective.
It's going to be, it'll be interesting, you know, like, because we all know that it will eventually, it's funny, the point that you made about looking at historical examples. I mean, you took the words out of my mouth. Like, that was going to be literally my next question. Like, where else in history have we seen this kind of, and I'm not the expert here, so that's why I was going to ask you. So I'm glad you brought that up. But, you know, I did, but what's an interesting point that you brought there is, you know, in microcaps, what could that potential switch be? You know, what will that switch be where is it that people feel like, okay, you know, I think the worst behind us, we can start to take more risk again? You know, is it just that simple bit? Or now that we have all, you know, this new wave of retail investors that are now actively trading and actively going in and out of stocks, you know, at some point, will they become, you know, will my subscriber base go up to over 1 million because they saw, you know, and because they saw a cool video that, you know, maybe this one, and they're like, oh, there's opportunities in microcap, really cool. Like, let's all just jump into every microcap possible. You know, like what could be that switch? Hopefully it is me getting to 1 million subscribers, of course.
We need a Dave Portney is what we need.
Yeah.
I mean, that guy, he's legitimately entertaining. I mean, that's the thing about it. He's legitimately entertaining right now. But like, it's hard to get people excited about microcaps who aren't doing some level of fundamental analysis, because it's just not. People want stocks they can like talk to their like dentist about, and like and like it doesn't work well for the microcaps. So, like I mean, what I'm going to say, Bobby, like with what's going to flip the switch is I don't think it's a micro large cap thing as much as international. I say this on like a broken record, but I just think that the quality of microcaps that first of all, the sheer number of microcaps that exist globally outside the U.S. there's just an enormous number. Many of them are in faster growing economies. Almost the vast majority of them have lower valuations. Many of them have insider ownership and better balance sheets. A lot of crappy ones out there, no doubt, just like anywhere. I mean, you look around, it takes me 100 investments to find something I want to dig into. So I'm not trying to say you can just blindly throw darts, but I see so much more opportunity outside the U.S. And I kind of got to a point, as you know, in the last couple of years where I don't look at U.S. stuff anymore. And the reason I don't do it is...
Sorry to interrupt you, Tom, but what countries are you looking at?
I've talked a lot about Poland here. I'm looking at some. I love Poland, as Bobby knows. There have been a couple. Pretty much, I might just have to move there at some point because it's getting so ridiculous. But and speaking of Poland, right? Like, I feel like maybe I badmouthed tech stocks a bit earlier. Everything I'm invested in Poland is tech. I mean, the business model. I get why people like the business model. It's a low capital intensity. It's high ROE, lots of cash flow. You can lock people in and make them somewhat sticky, although I think that gets over exaggerated. But the flip side is everyone now agrees that a good software business is high margin. Like everyone just agrees on that now, and that like makes me a little nervous. Because, if I'm buying a high margin business and I'm not paying too much for it, like I have some margin of safety if the margins drop. But if I'm paying a fortune, I'm saying these margins are going to continue. And I don't see necessarily any reason why margins couldn't collapse. I'll just give you the one example. I mean, if we see a bout of inflation at some point, which no one's pricing the risk of that in the market, like, guess what? Labor costs are going to go through the roof. Mm-hmm. Like, I don't see how software doesn't get smacked by that because their margins fall to something more realistic compared to other industries. So I'm not saying it's going to happen. I don't know what's going to happen. I don't have a clue what's going to happen. But, like, I can look at the pricing and see, like, what's priced in. So when I look at a country like Poland, they got all these great tech companies, but they're generally speaking, there's a lot more value there. So that's one place I look. I'm looking in places like Egypt right now because, I have so much history there that I just have to, and I'm finding cheap things there.
What stock? How are you buying like Polish or Egyptian stocks? I mean, you use what brokerage do you use?
Is that IB or?
That's the trick, right? So Interactive Brokers is very easy to get access to the Polish market. So IB, you can go to the Polish market, no problem. I've seen things in the Swedish market. I've seen things in a lot of East. They have pretty good access to like Eastern Europe, Northern Europe, certain countries in Asia, but not nearly enough. I'm actually in the process of working out a number of custody agreements that are getting me access to a lot more of the frontier markets. So, a lot of which I probably shouldn't disclose on this interview, but IB doesn't get you access to Egypt. You have to like dig around and find the right contacts and do the right paperwork and go attest a document at the Egyptian consulate sometimes. I mean, you gotta like go do weird crap, but like that's the stuff that like makes me excited because I'm like, no one else is dumb enough to do this. I'm like, I'm gonna be one of like the 3 people looking at this market. So like, I get excited about those things, and they have it. And like I said, like actually a lot of companies I look at there are tech, because tech companies are great. It's just, how great are they? Are they so much greater than the rest of the market that the top, 50 companies in like the country should all, 70% of them should be like Netflix or Facebook or whatever? It just something seems slightly off about that to me. It feels like, I don't know. I get it. They say software is eating the world. Like, is it? I mean, like, there's still so many dollars I need to spend every month when I open up my wallet, like, that are not related to these companies. In fact, Twitter, which I love, I have yet to spend $1 towards, and their market cap is through the roof. So, I don't know. Yeah, answer a question. Countries like, I love Southeast Asia, Eastern Europe, some of the Middle East. Going to start looking more at the African countries. I have a couple investments. You can access some of those markets through Canadian listed companies.
Right. Maybe if I could just pause you right there, Tom, because I'd like to just comment on a few things you just said. That I think you're on the cusp of a trend that has occurred over the past few years, but perhaps is now accelerating, right? Because a lot of a little more adventurous investors, people who invest in microcaps, right? Maybe at first we were looking at U.S. microcaps, right? And then we went over the border to Canada, and now we're a little bit in jolly old England, right? And perhaps a little bit in Australia. First hitting those English-speaking countries, right? But the value for it seems to be even in other countries like Poland or in some of the Nordic nations, and because of like platforms like Interactive Brokers, perhaps people doing a little extra work, it's a lot easier than it was like 20 years ago, right? Right. I mean, ironically enough, it's tougher now to buy microcap stocks in the United States than 20 years ago, but so much easier to buy certain stocks in other countries, right? And so, Bobby asked, like, so what is going to turn around? What's going to make people come back to this place? And, well, maybe successes like GAN, which I own some shares, right? People saying here's an interesting business, on the AIM in the UK, and then boom, you buy it then, and then it gets uplisted on NASDAQ, and it explodes, right? So people see, and then success begets success, and success, begets, imitation, right? So people start saying, well, where's the next stock that's going to be listed coming to the NASDAQ? Where's the next country I should invest in that hasn't been, let's say mine, kind of like Canada. Canada's basically been looked over up and down now. So I think in some ways, people are the seeds of future microcap success have already been planted. And we're already starting to see that a little bit there. I see.
Yeah, and
nice
my assistant just came in here, so yes. This is she knows how to get the door open. Unfortunately, the office. So yeah, this is my only analyst actually right now. So no. So and actually,
by the way, you got to stand up for a second because you have a second. You got a junior analyst. You have an intern. It's called your blue pants. You showed them off to us previously. There, you can see that's worth at least 300 bips of outperformance a year.
I married into a very waspy family, so like I had to change my short colors when I did that. It was part of the wedding vows. Yeah, no, we So anyway, guys, yeah. So what I would say. So
we're talking about I digress. We're showing off our cabooses. That's what we're doing here today.
And I probably just offended at least 50% of Bobby's like actual market out there. So I apologize. I want to just get right in front of that. I want to apologize to all the wasps out there. So, but anyway, like you're talking about like what you said is actually like one of the things I think is going to happen. You look at a company like Live Chat. I'm long. They're in Poland. At some point, like I imagine they're gonna relist, if not in the U.S., which probably I would think maybe that would be where it would be, maybe be the U.K. I don't really see any reason why they wouldn't just shoot right to the U.S. market. If that company shoots to the U.S. market and we mark them up to like they're comparable, like what are they? They're 10-bagger, 15-bagger at that point, like. I'm not counting on that at all. That's not remotely part of my thesis, but You know, like you want to give them like a Zendesk valuation. I mean, like they're valued what, 400 million. Zendesk is like 9 billion. I'd buy live chat. You offer me for them for the same price. I'd take live chat because they actually make money. And like, and you know, so you'll see some of that. There's another company that I'm in. I'll leave the name off for now. They're a pharmaceutical business. They're in Brussels, and their entire market's going to be in the U.S. They're coming in with a product that has zero competition. So yeah, I found them because I was talking to a bunch of sales reps who were all like, I was looking at one thing and they were like, "Yeah, that's okay. It's kind of sucks. You should look at this," you know. And like, so like I talked to multiple sales reps who were like, "Yeah, I was trying to get a job with them, and like I couldn't make their cut. They got all the good people because of drug sales and stuff." So I was like, "Okay, crap, I'll look at that." So I was in Brussels. I got excited because I was like, "Hey, well, these guys are there almost by a historical artifact. Like, as they roll out, they're going to relist in the U.S. I have almost no doubt in my mind, and that becomes part of the thesis. So you look for the microcaps over there and bring them here, and maybe they're not even microcaps anymore by the time they're here." But
hey, that seems to be part of the, and I want to get Kelvin involved too, because Kelvin has a very interesting perspective because he actually brought a number of investors, of potential investors from his own country to do a tour in the United States. So in some ways, it's the reverse. He brought people who were from the more frontier or from other countries and actually to the U.S. So I'd really like to get his perspective on this. I will say that we've seen a number of these winners move to the U.S., right? The GANs of the world, which I own, or say Expel, which was listed up in Canada, and got listed on NASDAQ and really priced, another stock that I own. It's a very interesting approach to find these companies because you have a built-in accelerant, right? A built-in, which is, uplist in the United States and access all those American investors who aren't willing to go abroad. But Kelvin, really, I'd like your perspective because we met in Las Vegas. You had brought a number of your friends over here to actually to see the United States and all of its pre-COVID-19 glory. So maybe you have a different.
Yeah. So Tom, I just want to mention that I feel that you're actually an adventurer, right? You are very innovative because maybe it's just my own experience. When I speak to a lot of Americans, you tell them, hey, you want to invest in anything outside America? They say, oh, no. They have this very, they just don't feel comfortable with that, right? Like anything that I can't see, I will not invest. And that was precisely the reason for a lot of Singaporeans to get stuck in the companies that we have in Singapore, which I can tell you upfront, I've been investing a long time in Singapore. We don't really have a lot of good stuff over here, so don't have to bother opening an account, okay?
I don't know whether to take you at your word or you're just trying to misdirect us. I mean, well, there's a lot of great companies over there, but I'll take it.
I think this is a contrarian move.
Yes.
He's got this whole Singapore portfolio right now. He's like, nah, it's not that good. We're like, it's not that good. How not good is it?
Make some post
terrible. Don't do it. I'm 99% Singapore, but
yeah, but I think I just want to mention, when we talk about those countries, I thought that was very interesting because recently I think I have this friend that actually have lived in Israel for a long time, and he had been telling me that in Israel, if you look at the number of people who are actually investors, it's actually very low. Likewise, if you look at Australia, right, I think a lot of people are just property investors instead of stocks investors. So, and sometimes, I'm actually looking at one company right now in Israel, so I'm adventurous as well, right? So that actually kind of, and I agree with you because if you look at certain countries, like the company that in Israel, for example, they actually operate the national infrastructure for the credit card clearing, and they're actually the ATM certificate switch, right? So any transaction that goes within the country, they just take a small cut. And Visa and Master tried to do that, compete with them, but they couldn't. So Visa and Master ended up taking 10% stake in the company each, and the company just below 100 million market cap, right? You talk about UK as well. I think there's a lot of SaaS companies in US. Definitely is a bit more elevated in terms of the valuation. But if you look at UK, I think it's quite reasonable. But I actually do think it's a lot of price discovery, right? Because investors down there, they may not be as hardworking as people in America. I think in America, I just want to give you guys credit. You guys work really hard. You guys, did a lot of things. You guys harass CEOs, not really, right? But you guys actually work already have information, right? But when I speak to a lot of friends, I think globally, they don't do the work that we do here. Maybe I've not met the real deal, right? But a lot of people, they don't do the work. They just look at financials, they just buy. There isn't really a lot of financial education over there. But I do think that there's one big risk when it comes to investing in those frontier markets is that, I always find it very comforting if I have like a couple of friends, locals, who can actually tell me, the context over there, because I think there are some hidden risks that we do not see, like from my perspective is that when I invest in certain countries, like say we talk about in Malaysia, right? In Malaysia, we have certain good companies, but I think a lot of them are unfortunately tied to political parties, right? So when political parties change, some Asia countries that, I don't want to name which countries, but there are a lot of corruption. It's all linked to certain political parties. And if they change, that goes, a lot of fortunes will be changed, So just one example. So I do think, while it's very interesting, but I think there are some hidden risks as well. And I think to the point, I've seen certain companies from Australia. Actually, Australia is just a very nice, I think, country. There's a lot of health innovation, that's going on, and some of them actually have dual listing in Australia, in US as well. So I thought that was very interesting. But one thing that I always caution myself is that I got to know someone that is local down there, because you just want to know that things are really proper. And sometimes when because for example, there's this one company I was investing in US, and is a company that actually is from Israel. So I invested in it. I thought things were okay. I did my due diligence, stuff like that. Then when I spoke to one person who is from Israel, he says that the CEO has actually a very sketchy background. It's very well known in the Israel business community, and that really got me a shock, right? So, I mean, those are just some of my perspectives to that.
I think that's such a wonderful point, by the way. I call it, it's part of my investment checklist. I call it the gringo check. Is basically like I try to like, it's really, really, really good idea to find an investor or two who lives in the country. So you move to this country, you spend some time on it, you learn a ton about it, you meet people, you interact with other investors there, because it's crazy. It's always valuable meeting new investors, especially globally. But two, like they'll be like you'll throw an idea out you're super excited about, and they'll be like, you got no idea what you're talking about. Like here's the problem with that, and they can cut you off at the pass. And sometimes they're like, oh yeah, no, that's pretty good, and you're like, okay, I can continue down this track. And then of course you always got to talk to management. And some of these countries, it's really easy to get the management on the phone, and they're great. And then other ones, they don't want a piece of you, and you just need to move on to something else, because you don't want to be fighting with management in a foreign country. So,
but I think those really unique opportunities are where, I think if you look at some of the companies in Israel, I think they are really very innovative. Some tech companies are very innovative, and the crucial issue for them, I think, their annual reports are everything in Hebrew, right? So who's going to go and dig up stuff? It's going to be really, really hard. So, and I think that's where things get changed when they realize, hey, there are some investors in the United States who are really interested in what they are doing. They do a first PR in English. They put out investor slides in English. Suddenly, everyone gets to understand what their business is, right? And, sometimes they may not even need to, they will be probably growth companies, but, without any growth in earnings, just a multiple reversion to what they could mean, if they list in US, I think could provide excellent, superior results as well.
And by the way, just to add on to that, what's amazing is Google Translate is the most phenomenally perfect thing ever. You can literally take the document, you can throw it right up there, spits it back. And if it's literally such a nasty scan that Google can't handle it, which I've dealt with, there are companies, they pay almost nothing to send you translated versions of these things. And that's actually an exciting thing too. Is like, Jason, going back to like the whole, it's not just about getting a company that's like, you're going to like relist over to the US. How about a company that doesn't have a good presentation in English? You get it translated, you take a look, you do the work, you talk to like the head, you like invest in. I got one of them that meets this bill right now. And And heck, it's like, that's some point they keep growing. They're gonna hire an IR firm if they put out some nice English materials, and really, no, honestly, I think people don't want to deal with it if it's in a different language. Even though it's pretty easy.
A lot of, and perhaps this is one of the changes that's going to occur because of COVID-19, right? We're, and this is an opportunity, Bobby, for you to plug any your upcoming conference, right? But we're having a lot more virtual conferences than we did a couple of years ago, right? So this opens, over time, this will open up the door to companies from all over the world, really to try and reach out to American investors who can actually buy their stocks even if they don't have an American listing, right? So I think there's that's one of the positive things that perhaps for people in investors like us are going to get out of this. We're going to see many more people, many more companies, chatting online than we ever had before.
I got to tell you, that's kind of been my main thing. Actually, I was really inspired mostly by Tom. When I first interviewed Tom, he was the first one that changed my head of like, with the dual listing and all that. And, that's interesting. And yeah, okay, it makes things a little easier, of course, to go and get some exposure to some of these foreign domiciled companies. But at the end of the day, you just do a little bit of extra work, or you go and move your stuff to the right discount brokerage. I mean, that's the whole reason that we're actually one of the panels at the event is an ASX listed stocks that have operations in the US, because a lot of US companies are also now looking abroad to then go and list, because the infrastructure in the US can sometimes be pretty damn expensive. Whereas if they're a smaller company, the venture markets, and the TSX has done phenomenally with this. The ASX is coming up in the game. It's pretty damn interesting to see what some of these other foreign exchanges are offering to growth, newer, smaller companies.
Yeah, I predicted, maybe, I don't know whether it be 2 years, 3 years, or 4 years from now, but eventually someone's going to have a conference where it's just purely international companies, like purely these companies which aren't even hardly listed in the United States, right? And then honestly, I think that would be the most profit potential making conference of all time, because
let's pressure Bobby a bit. Let's pressure him.
Just trying to punch the screen there.
I need your help with idea generation. I don't even know where to start with looking for quality Polish.
I know,
yeah, Tom.
Yeah, Tom. I got this. Give me a list of 50
party conversation.
This business idea is sick. Let's take this offline. Yeah, cut.
No, this is a terrible idea, guys. Don't worry.
It's a bad idea.
Terrible idea. We're gonna stop here.
These countries are flaming dumpster fires.
Yeah, dumpster fires.
Terrible businesses.
Yeah, terrible idea. No one should really. But hey, real quick, before I let everybody go, I wanted to hit on one of the topics that Kelvin sent in, and real quick, I wanted to adjust it a little bit because he asked about learning from each other's investing successes and mistakes, and I feel like we could do one whole show just on trading off stories. In fact, I might have something very cool coming up in that regard, but I digress. But I figured what would be kind of interesting to hear from everybody is maybe a couple lessons you've learned since COVID hit, from I guess from your own thesis. What are some of the things that you learned, mistakes, or hey, I made this little adjustment and it actually helped me out. Anybody, floor is yours.
Yeah, I guess I'll start really on a very quick note. I think the lessons I learned is you got to be very nimble. I think that's really important, and I think a lot of times, despite whatever investment books we have read, whatever research we have done, I think what is really important is that you got to really surround yourself with really good investors. Like you talk to people on a regular basis, and you cannot just invest based on your own view, right? Really get a different perspective to that. So I tend to bounce off ideas with a lot of investors, and during COVID-19 period, I think that was extremely crucial because sometimes, you feel like you're not analyzing this emotionally, but there could be some things that people could point out for you. So I think that was important, and I think one of the lessons as well I think how I've grown my wealth over time is really holding concentrated positions, and that have really worked well for me. But I think for COVID-19 period, does that change the way how I invest? I think no, but I think what I'm going to focus a lot more is really, I'm the guy that is scared to lose, right? Because maybe it's just the way how my portfolio is being constructed. So actually a big chunk of my portfolio have been switched to one of the companies that is actually in the backyard. So Singapore, we do have some good companies, right? One of them, not listed in Singapore Stock Exchange, but listed in United States. So that's C Group, right? So they own Asia Pacific's #1 e-commerce website. Their game Free Fire is the most downloaded game last year, 2019. So I switched to that, and I think COVID or not, right? I think they will still continue to benefit because of e-commerce. That's actually, if you look at successful cases like Amazon, it's not hard to imagine that one of their e-commerce segment, Shopee, would do well. So I started to really focus on those ideas a lot and really focus on building a lot of network of investors. So because sometimes however much we work, I think we may not have like all the full picture, right? So sometimes you may have missed out on things. So I really find it's very beneficial to kind of talk to people. So a lot of my time right now is just really doing a lot of work and just kind of speaking to a lot of people and getting to know people. I think that's really interesting. You just want to have different perspectives as well. Yeah.
Well, I think I have 2 points, and probably the first point is a little bit more serious than the second point. The first point, what I've learned is that when I came in, when the COVID-19 situation occurred, and it started hitting the United States, I was really just focused, perhaps too much, on like the headwinds to all the companies that I owned, right? Looking for the where things can go wrong, right? Where the stock that I only have in my portfolio, where is it vulnerable? And I didn't focus enough attention, let's say, usually on some of the smaller positions, like which ones would really benefit from the tailwinds that were being created. Situations like GAN, that I really should have put a little bit more, the pedal to the metal on it. And of course, I think that in some ways, a stock like GAN, which again I own, has done better than what most people would have even thought. But there are clear winners that come from people, staying at home for a month or so. So I wish I spent a little bit more time just thinking about the tailwinds. And the other thing, which I've just learned now, is that I really need a blue pair of pants. I don't have a blue pair of pants that come close to your pair of pants, Tom. So I think I got to pick one of those up right after this call is over.
Blue pair of pants.
I have this exact model of pants in like every color too, is the thing too. So don't just constrict yourself to blue. You gotta like really look. I got pink. I got different shades of blue. These are they're good. So
we've learned that we got to invest all over the world, and we got to have different shades of pants. That's what we've learned today.
I'm gonna do a bit of business for you here, Bobby. Actually, these are Pumas. And like Puma golf shorts, and man, they're good. They are so comfortable. They're so great.
They look like one of those. They look like those hybrid like board shorts also that you could wear. You know what I mean? Like they look very comfortable. I'm gonna have to get a pair.
Yeah, no, these are my longer ones that I could like wear out in public. And then I got a pair of Chubbies, which I don't know if anyone's ever seen those shorts. You can Google that. They're a little bit more revealing. So I. Be happy I didn't wear those to the podcast today, because that would have been risky. So I guess what am I supposed to say? The lessons I've learned now? It's just Bobby's nodding. Yeah. So yeah, I mean, yeah. God, I don't know. I mean, mainly I think I learned that if you cancel sports and send everyone a check, people go crazy in the markets. I think that's been a big piece of it. I wish I just bought the crap out of Tesla instead of holding puts like an idiot. So I can't say there's been like a massively deep lesson that I've like learned from it. It's been, I kind of, because like I was already pretty conservative. I had a lot of, I already had a lot of stocks that were, essentially strong balance sheet type businesses. Some of them did well, some of them still fell a bunch on paper, but yeah, I didn't feel like I was losing sleep or anything during this, which, it reinforced that maybe even more strongly in my mind that, that, you know, if you're going to own something that's like, you know, fragile, you know, whether that's questions about the business model, which are maybe less likely to own, or maybe say a bit too leveraged, you got to be really high conviction on it, and you got to be prepared for that thing to go to zero. Because if I'd had more of that in my portfolio, I think it would have been tricky, because like you're having, you know, as Jason said earlier, everything happens so fast, you know, and it was like, I think we all thought we'd get a little bit more time to build up and acquire positions. I was able to buy a lot of stuff I liked, but you know, you never get quite as much as you want. But like, I didn't feel like I had to spend a lot of time digging into my current positions and making sure that I didn't need to, you know, fire sale during the peak decline, and that enabled me to focus a bit more on what do I want to add rather than what do I want to subtract. I'm not sure it was like a totally new lesson as much as I have new appreciation for it. The only other thing I learned is that if my kids aren't in school in the fall, I am fleeing to Mexico and you will never see me again. So, because having kids at home during the day, like for months on end, I mean, my kids were in Zoom meetings. They were in like 5 Zoom meetings a day. It was it made for a tricky work day some days. So like I am 100%. I don't care what happens. That is what I've learned. Never again, you know, will I be caged with my kids for 3 months in a row. So hopefully they didn't hear that in the next row.
Don't worry, they're gonna find this video like 10 years from now. Like, thanks, Dad. I really appreciate that. You know, we're not. You're going into an old person's home.
They're not even going to make it 5 minutes in. They're just gonna be, even if they like investing, they're just going to be, look at this nerd. And just shut it off. So that's the good news. So they won't even make it to this part.
Yeah,
this is good.
Hour 15 in, they're like, yeah, no, you had us we were done at minute 2.
Their friends will see it and use it to make fun of them. So, you know, so that'll be good.
All right, guys. Well, we're there. So let's everybody give the audience where they can go and follow you, you know, your website, your Twitter account, you know, the whole deal. So Kelvin, let's start with you.
All right, so you can follow me at Slingshot Cap on Twitter. Yeah.
Jason?
You can follow me at Bachrach with the EIGHT track 18 on Twitter. 180 actually, Bachrach 180. It's one of the 8 tracks.
Just follow all the 8 tracks, and you know, one of them's gonna have super witty commentary.
Yeah. The 1-8 track with all the witty commentary on MicroCap stocks. There's only one.
Yeah. I guess that's me now. Yeah. So I'm Twitter PFH Cap. P is in Paul, F is in Frank, H is in Henry. Cap. Wait, that's not even right. God, I'm wrong too. PFH Capital is the Twitter. So PFH Capital, Paul, Frank, Henry. PFHcap.com is the website. But I have very little up there that's useful to you. So don't do it unless you want to reach out. So,
which is code for please follow me, as many of you as possible.
Yes, and if you're someone who's listening in Poland or Egypt, please reach out to one of us. We probably want to talk about stocks in your particular market.
Yes, please. We need boots on the ground all over the world now. Okay,
all over the world.
Let's go.
Yeah.
All right, guys.
You are in my wheelhouse if you're in those countries. Yes.
All right. Well, thank you guys for joining. This is a lot of fun, and who knows? We may see one or more of you next week. All right. Mm-hmm. Have a good weekend.
Thank you, Robert.
Thank you.